Hi there, business owner, and welcome to the 3Bs podcast, the place where we go beyond the numbers and dive into strategies to help you build a better business one step at a time. I'm your host, Stephanie, a multi-award-winning entrepreneur with over a decade of experience in the bookkeeping and accountancy world. If you're a business owner looking to streamline, grow, and get back the time that you deserve, you're in the right place. We're tackling real-world problems, answering tough questions, and digging deep into business building secrets in just 15 minutes each week. So are you ready to build a better business with confidence and clarity? Then let's go. Hello and welcome back to another episode of the 3Bs podcast, your go-to 15 minutes of CPD certified motivation, inspiration and education each week. How amazing was that conversation with Nicole last week? I love having a guest on the podcast. It makes a nice change, right? This week's episode, we're going to get into the finance again. We're going to get into the nitty-gritty of the new national minimum wage, the new changes to national insurance, and the things that are going to affect you as a business owner if you employ people. So it's important to note that these new national minimum wages only take effect from the first pay period after the 1st of April 2025. If you have a bi-weekly payroll, so if you pay every 2 weeks and the next payment date is the 9th of April, then you will not need to apply these new minimum wage rates because they only apply from the first pay period that starts after the increase, so the 1st of April 2025. It's definitely important to note that because a lot of people get that wrong. You can obviously pay them the new rate from the 1st of April if you choose to, but it only needs to be paid from the first pay period that starts after the 1st of April 2025. So I guess the first thing to talk about is the rates. Anyone aged 21 or over gets the national living wage. 18 to 20-year-old have their own rates. 16 to 17-year-old have their rates. I did hear Rachel Reeves last autumn in the autumn budget say that she wants to eventually get rid of that 18 to 20 line as well. So anyone aged 18 and over will then get the national living wage is definitely what they're aiming for. And it's something to be very mindful of if you're a hospitality business or you're a business that hires a younger workforce, because actually knowing that the minimum wage is going to be £5 an hour more for them is definitely something you're going to need to be aware of, because that's really going to affect your profit margins, your break-even point, and the profitability of your business. And if you're listening to this or watching this podcast, I presume you want to build a bigger business. So let's do it the right way and be mindful of all these things so that they don't trip you up. It's better to preempt this than get caught out by it after the fact. The new national living wage for anyone aged 21 or over is £12.21 per hour. It's a 77 pence increase, or 6.7%. The next one is 18 to 20-year-olds, so it's now £10 per hour, an increase of £1.40, and a huge 16.3% increase compared with the 21 and over. And even higher than that, the apprentice rate, or the 16 to 17-year-old rate, is £7.55 an hour, a £1.15 increase, which is 18%. The apprenticeship rate applies to anyone who is in their first year of apprenticeship or is aged 19 and under. And that hasn't changed yet, but I think that may change in the future. So again, something worth remembering. If you're hiring apprentices that are over 19 and it's their first year of apprenticeship, you still only have to pay them £7.55 an hour. You don't need to pay them the 18 to 20-year-old rate or the national living wage, but it's important to note when their first year ends, because then you will need to pay them the correct wage for their age bracket. The other huge change is the national insurance change, and this is where lots of people are worried as business owners, worried about losing their jobs as employees. So I thought I'd try and clear it up a little bit as what they've done, what's changed, and how we can counteract that slightly as business owners and as employers. So Class 1 national insurance is the thing that broke the big headlines, and that is deducted from an employee's payslip. So the employee pays Class 1 national insurance, which you deduct from their pay and pay with the HMRC before they get their take home. But as an employer, you also pay Class 1 national insurance, which needs to be paid to the HMRC. Now, it's done based on the earnings limit, so there's thresholds that, depending which threshold you hit, is when you start paying national insurance. So for an employer, this has been reduced quite heavily, so now it's £5,000 per year. If your employee earns £5,000 in a year or more, you will start paying Class 1 national insurance as an employer. Now that breaks down to £417 a month or £96 a week. So Most full-time employees, if not all, will definitely be over that threshold, and that will kick in from 5,000 that an employer starts paying that Class 1 national insurance. The employee starts paying Class 1 national insurance from the primary threshold, which is £12,570 a year, £1,048 per month, or £242 per week. And there's also the lower earnings limit, which is £6,500 a year, which is now higher than the secondary threshold, £542 a month, or £125 per week. That's important because that is the point where benefits take over. So if you have part-time employees that are getting universal credit, they need to earn that lower earnings limit with you, or universal credit will start being restricted and they will need to find alternative employment or more hours. So if you have employees that are maybe part-time or working in school hours, it's worth noting that and maybe telling them, I do say that preempting it and sort of making people aware of this before it impacts them is a much better way to do business, or a much better way to have employees. You're going to build that trust with them. They're going to think, oh, they are looking out for me. That my boss does care about my situation and they're trying to help me. And you'll get a lot more out of them from the back of that. And I wholeheartedly believe that. So the secondary threshold is £5,000 per year. What that means is for every employee that earns over £5,000, you will need to pay Class 1 employer's national insurance. Now, not only has the threshold been reduced, but the percentage of Class 1 national insurance has also been increased. So it was 13.8%, it is now 15%. So 13.8% used to kick in from £9,100 a year, it's now 15%, and it kicks in early at £5,000 per year. This is where it's important to speak to your bookkeeper, your accountant, your payroll provider, whoever deals with the payroll in your company, to make sure that they are aware of the changes. They should be able to tell you how it's going to impact you too. So we created a spreadsheet for our clients at ABCS UK in the practice so that they could put in the dates of birth. We factored in changing national minimum wage bands. We factored in the insurance, when their automatic enrolment kicks in for their pensions as well. So they can type in and see where they were, where they're going to be, and if they're better off, worse off, to make real informed decisions rather than going in blind and being hit with a high national insurance bill. It's definitely more important to be prepared, and I hope you're getting that from this episode. So if your payroll is you as a director and one other who earns at least that secondary threshold, so that £5,000 per year, you are eligible to get employer's allowance. If you don't already get employment allowance, then you definitely need to apply for it, and you can also go back years. So in previous years, if you were over that secondary threshold for an employee other than the director of the company or directors of the company, you were eligible to get the first £5,000 of your employer's Class 1 national insurance paid for by the government. You could use that allowance to offset, so you didn't need to pay it. And it's done in a way that if your national insurance bill in month 1 was £4,000, they would take that £4,000. It isn't spread over the 12 months or prorated across the year. It's up until you use it, and then you need to start paying. So it could hit you in month 2, month 1, month 9, month 10. When you start paying, it could be that you don't pay it at all for the year. Because that threshold has lowered, because the percentage has increased, what the government have done is they've more than doubled that employment allowance. So for 25-26, it's going to be £10,500 a year. Again, make sure you or your person who does your payroll has ticked the box to say you're eligible. You need to do that. They won't automatically apply it for you. And again, up to that first £10,500, which will hopefully give you a little bit of a reprieve for the first couple of months of the tax year while you get used to all the new payments and start making plans if you haven't already. If you need help with the employer's allowance, or if you need help with understanding the changes, do drop us a message. We're on all socials at the 3Bs podcast. You can also email hello@the3bs.com. The link's always in the show notes for you to contact us. I can give you a copy of my spreadsheet, or we can jump on a 15-minute call and I can explain the changes to you quick and easily, like we do here at the podcast, on how it affects your unique situation, because many things... Payroll is one of the most complex beasts in bookkeeping and accountancy, because you've got pensions, auto-enrolment, national insurance, payroll and benefits, annual leave, sick pay, maternity pay, you name it. It is one of the most complicated parts of running that finance element of your business, and you really do need to speak to an expert who can explain it to you in an easy to understand format so that you know and understand what's going on in your business. Even if you don't do it yourself, you need to understand the changes, you need to understand what that means for your business so that you make more informed decisions going forward. The biggest part of business is having that data and using it to make informed decisions, and you will hear me talk about it constantly, because having that data to make a decision could mean saving your business or not. It is that simple. You're not going to want to borrow irresponsibly. You're not going to want to go out and buy that new £30,000 piece of machinery if you can't see the return on investment. You don't want to go and spend £10,000 on a billboard if you don't have it in the company, if you don't understand the return on investment, you don't understand the benefits. It just looks pretty cool. So again, having that data, being informed of the changes is really paramount. And hopefully you're listening or watching this podcast because you want to know the changes and you want to make yourself armed with all the information you need to make that decision as a business owner. You will have seen in the headlines, there is lots of the bigger stores, bigger companies closing their stores, making people redundant. I know a couple of the banks have made a load of redundancies because they're streamlining their workforce. Again, whenever costs rise, whenever inflation rises, whenever something adverse affects the cash in a business, the first thing people do is start to streamline. Where can we reduce costs? Where can we be more productive? Where can we make more efficiencies? And now is the perfect time for you to do the same in business. So I hope this episode's been useful. It's probably quite a quick episode because I just want to give you the information and I want you to take that and implement that into your business. If you've liked this episode or any of the podcasts, please do like, rate and review wherever you're watching or listening so that I can reach more business owners, because that is my passion, is to help as many business owners as possible, and I can't do that without your help. So please do that. And if you haven't already and you've listened to or watched all of season 2, go and head over to the CPD group and enter the code 800032 and you'll be able to get your CPD certificate worth 780 minutes or 13 hours. It's particularly important if you are in a business or an industry where continued professional development minutes are really important and you need to get them. So mortgage advisors, bookkeepers, accountants, anyone that's in that sort of industry, this will all count for your CPD. And tag us in social media when you've got it. I want to see your certificates. I want to celebrate with you. I want to thank you for being a part of the podcast. It means the world to me. And I will see you next week for the next episode of the 3B podcast from our new home. I'll see you then. Bye. And that brings us to the end of another episode of the 3Bs podcast. I hope you found it useful and that you're walking away with some motivation, inspiration, or education to help you build a better business. Don't forget to subscribe, leave a review, and of course connect with us on social media for more insights, tips, and behind the scenes content. Your next step in building a better business is just a click away. I can't wait to connect with you, and I'll see you on the next episode. Bye.